The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Europe's defense sector is currently experiencing a pivotal moment. In response to growing geopolitical uncertainties and the need to enhance security, many European countries have significantly increased their defense budgets. Now, this surge in spending is driving rapid change across the industry, fueling innovation in defense and intelligence technologies, and creating new investment opportunities, especially within the alternative asset space. Against this backdrop, funds like Lundgreen's High-Tech Defense Fund are providing investors with direct access to high-growth companies at the forefront of these technological advances. So where do the greatest opportunities lie, and how should investors approach the inherent risks? And what trends will shape the future of defense investments? Well, to find out more, joining me now is Peter Lundgreen, who's the CEO of Lundgreen's Capital. Peter, welcome back to the show.
Thank you, John. It's a pleasure.
Thank you so much for joining us. Well, Peter, what's the current state and future outlook of Europe's defense sector, especially in light of the recent surge in defense spending?
As honestly, it's sort of all of a sudden very hot, so to say. We should imagine that a lot of European countries, they really have underspent on defense for decades of years, and now it looks like overspending, but it's back to a very high level. So it's like the spending is moving from 1% of GDP in some countries, in many countries, to maybe 5% of GDP. It's an enormous move, and it's pretty fast it will happen. So, of course, that is very interesting for investors.
Right, definitely. So given this evolving defense landscape, what types of investment opportunities are emerging, particularly within alternative assets?
Yes, when we look into sort of a bit to the alternative companies, there are companies out there, sort of a mid-sized companies, defense companies that have survived this very low spending period of several decades. They are actually interesting because all of a sudden they have the production facility and they get new orders and they grow pretty fast, some of them. But of course, it is also the time when young startup, scale-up companies are coming into the market. The most interesting is actually the young companies coming into the market, thinking differently, being very high-tech focused, that sort of the older mid-sized companies may not be. So this is where there's really a lot of things going on in that space.
Right. Well, at Lundgreen, you have a high-tech defense fund, which offers investors direct access to high-growth defense and intelligence technology companies. Tell us more about this fund, Peter.
Yeah, it's, of course, a reaction on the new opportunities. In Denmark, we were the first to get alternative funds created. It's 1.5 years in the market, but we have, of course, been working with the fund for like 2 years. And 2 years in this very sort of new upcoming market it's pretty long. We have 10 investments already, and we are, investing into pure defense companies. There's no mix. There's a problem for investors is that if you look into existing listed companies, they are very often conglomerates. That means they have some defense, maybe a defense division, but you also purchase a lot of other production divisions that is not necessarily aimed at defense. It's very hard to find the pure defense companies. There are only a few. They're very well known. They are skyrocketed in price, of course. So that's how our fund is built. We look into the high-tech area. The fund is moving fast with some of the investments. Despite it's only 1.5 years since we did the first investments, we expect to have the first exits within 3 to 4 months. That is unusual fast, but it also shows something about the sector. Everything's just moving fast.
Yeah, definitely. But how do you identify and evaluate high-growth defense and intelligence technology companies for the fund?
Yeah, 2 ways. We have a very strong cooperation partner that is, as a defense company, they are very fine in identifying new needs for technologies that they develop together with technical universities, meaning they have a very short development time, maybe only 6 months. And this is one of our challenges to find as we fund these new investments or new innovations. But we also already now have shortlisted 20 young defense companies from across Europe that we are looking into and learn to follow a bit closer. And this is more sought for next year and until then we continue to fund the technologies we get offered from our cooperation partners. So we will have another 10 investment coming in this year, and next year it will be even more.
So how does the fund then balance potential high returns from emerging tech companies with the inherent risks in this sector?
Yeah, you're right, German. If there's high returns, that also should indicate some high risks. And this is also the case in the defense sector. There's only the advantage that there will actually be poured a lot of money into the sector. So we know that there will be a lot of money to grab from. That is the unusual, interesting part for investors. But anyway, as mentioned before, there are a few old established companies within the sector also when we look across Europe, but a lot of the investments that will go into companies, they will be into young companies. And we can say we have other funds where we, since years, very successfully have invested into very young companies. We are extremely fine moving around in that of the lifetime for companies. We raise a lot of equity for young companies, and actually we are a growth company ourselves. We know the feeling, all of the stages that young growth companies, they go through. So that part of I would say in general, we are very comfortable with young companies. We know good and bad, and of course some will be successful, some will not. They will not make it. But this is basically sort of our base, so we are okay.
Okay, then how has investor interest in the high-tech defense fund evolved since its launch back in 2024?
It's growing every quarter. Investors are simply coming in, and they're not leaving. We could also see that the ticket sizes that people are giving us, they're bigger. We have the first sort of semi-institutional, semi-professional players looking very close to our funds. We have seen even pension funds speaking with us because there are not a lot out there to speak with. So even there, and normally we or smaller funds like ours would not be in conversation with pension funds, but we are actually. So it's growing, and defense is a must-have. There's no doubt.
Right. Well, if defense is a must-have here, Peter, in what ways should the rise in defense budgets influence investors' approach to investing in this sector?
It is a bit sort of almost very as a sort of sudden move that's existing sector, but it's simply booming as it is and will continue. We can look into the next 10 years budgets for all European companies, or almost all European countries, and we can just see as this is getting confirmed, and even the US has pressured Europe to spend even more on defense. So we can see it is a sector that is there, and it is simply bigger part of the economy. That also means that it will have a bigger weight in a general investment portfolio, because a normal investment portfolio would sort of also reflect how the economy looks like and is built together, basically. So the investors' approach, so to say, it's very hard to avoid looking at saying, okay, I don't want to look into the defense sector, because it is really something that is there to stay for the next 10 or 20 years. So and it's an opportunity. So one way or the other, it's just a fantastic idea for investors to look into that sector. Yeah, a bit forced, so to say.
Definitely. Well, thank you so much, Peter, for your time and your insights today.
My pleasure.
Thank you. That was Peter Lundgreen, who is the CEO of Lundgreen's Capital. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download